So if you missed on some of those moves, what do? Our next guest says, don't worry, we've got other retail names for 2026. Joining us now is TD Cowen senior retail analyst Oliver Chen. Oliver, welcome to you. First of all, do you stick with any of those winners?
Kelly, hi. Happy holidays. We are still excited about the future ahead for Warby Parker. Warby Parker's in a very unique industry, eyeglasses, which is very duopolistic. What's happening there is real high net promoter scores in terms of pleasing customers. Also, their partnership with Google in the future of glasses, that's a positive too, and continued store rollouts. Everybody does need glasses, or increasingly so. So structurally, it's a good industry with plenty of growth and innovation ahead. And it's one of the original digital innovators. Lastly, it's glasses at a great price. So it offers you compelling value too. So we have a buy rating on Warby Parker. My colleagues are also very bullish on denim in terms of what's happening in denim, and Levi's is a top idea there.
Yeah, I've heard that actually, Gabrielle Fonrouge was saying American Eagle isn't even doing well because of their famous Sydney Sweeney denim campaign. They're actually selling a lot of pajamas, but regardless, they're doing well. So they're on the list. Victoria's Secret had a great month. Either one of those, you mentioned Levi's might be the way to kind of play the denim trend. What else is on the list for 2026? And is it the K-shaped economy? Is that a real thing? Is that just a narrative? Are there investments you're making there?
I mean, you're bringing lots of great points. Our top idea is Walmart. We've recommended Walmart for several years. I'm a great example. I'm wearing a $50 blazer from Walmart, free assembly. And Walmart's capturing the lower and middle income consumer as well as higher household income. The K-shaped economy looks very real to us because what we're seeing in our data and our research is lots of pressure at the low and middle income consumer. The economy and what's happening, it's somewhat fragile in that the lower 50% of the population doesn't really participate in the equity market upside we've seen. Furthermore, the top 20% of the population is accounting for 50% of consumer spending. So bottom line, Walmart captures both in that our data shows a higher household income customer coming to Walmart with Walmart Plus, the marketplace, AI, great clothes, their apparel trends are great. But Walmart's also famous for everyday low prices. I grew up in Natchitoches, Louisiana, going to the Supercenter.
Same.
They have the best deals on organic, and pharmacy and food and grocery is a hard, low-margin business. So our top idea is Walmart because you're getting that defense and you're getting the offense. You're getting chicken as well as diamonds when you think about Sam's Club. We also love Costco, too. I saw that Costco receipt on your GPP of the year.
I was wearing the earrings the other day. You and I are similar, Oliver. I grew up at the Supercenter in Rockbridge County. But, Steve, what were you going to say?
Yeah. I was going to ask Oliver. Oliver, I don't cover the retail stocks, and I'm not much for brand names, as you might expect. But I've never quite understood American Eagle. It seems like that's a company that was the flavor of the month, and then it was hated, flavor of the month, hated, and now it's liked again. What are they doing over there? If you look at a 5-year chart of American Eagle, it's like up and down and up and down.
Yeah,
it's riding
Steve,
a real roller coaster. They seem to have the ability to hang around, though.
Well, Steve, the name of the game in retail is like very heightened competition. Also, the mall has been a tough and volatile place to be. Over the decades, mall traffic has unfortunately been negative. And there's constantly winners and losers. That's why we like Walmart with the stability of the food business. As you think about specialty retail, fashion volatility is just part of the reality of what you're facing, and trends can come in and out. Retail investors are looking for timelessness. There's also a major AI story. So our top ideas include Walmart and Costco. We also like Richemont and Cartier, but you and I have talked about the consumer. The consumer is really at a crossroads with lots of things happening. Meaning the consumer is very fundamentally strong with low unemployment and wage growth outpacing inflation, but the consumer is sentimentally weak. So we have a bifurcation in terms of how consumers are feeling versus what they're doing. And all of retail is kind of caught in this crossroads and having to execute at change. Generally speaking, apparel is a very tough category because there are many low-cost alternatives and it's a willingness to pay model. That's why we like beauty. That's why we like wellness. That's why we like Ulta. And then gold, Cartier, luxury, high-end. Lots of different ideas, but you can't own them all, and you really have to change. And fashion matters, too, in some of these stories.